Hey, what's going on, guys? It's Will. Hopefully, you're having a great day today and you can hear me okay. We did have some questions on if we could turn the volume up more on the live session, so we'll make sure to do that. In this video, we're going to do a full breakdown of the top data center companies. We're going to talk about nuclear companies, and we're also going to do an analysis of some of the AI drivers right now, including the sourcing of the materials that potentially could be energy sources that are used for the AI boom that we're in right now. So let's jump into it. First things first, we have a list here of data center companies, and we're going to start it off with the highly requested APLD. APLD stock is one we've been following and investing in since about $3 a share. We've seen it really have this consistent uptrend from April into higher highs, basically finding support, continuing to hold above that 200-day moving average and making its way up into all-time highs here at $18. And I should actually be careful. I don't know that's all-time highs. It might have spiked higher back in 2021, but we are at a high for the year up at $18, and it's made this 38% increase from $13 to $18 recently. So part of the reason why we have it on our list here, as AI continues to develop, there's no question that there's going to be a more heavy focus on the energy that goes into powering AI right now. And I see Mygel in the chat. What's going on, Mygel? You see Johnny is here. What's going on, Johnny? Grodiska is here. How are you guys doing? So one of the things that leads to investing success is being able to backtrack and say, okay, where is this big thing that's happening? What is powering it? And being able to find those companies are where investors find the most success, at least in my experience. So when I've had the best investments, it's come from looking at an industry, going back, reverse engineering, and saying, where is this starting from? And so data centers are a big piece of the AI boom that we're in right now. So when it comes to APLD, we'll get into the technicals. You can see it's maybe overbought at the moment, up into these resistance levels at the highs of $18 a share, which is great, as we do have long-term positions there. But the company, why we like to cover it is because one thing to note is they are building the AI data centers that are driving a huge amount of, this new revolution of GPT, of Grok, of, computing power for Google and Apple and Microsoft and Elon's companies. And these data centers are based on finding points of generation that are scalable, building in places that are cool, as well as doing liquid cooling in the data centers. And they're partnered with some big tech companies. They have this wind turbines that they do. They have the solar power. They have the hydroelectric, all that goes into the development of these data centers. And so that they're not putting such a toll on the grid. So when it comes to their partners, they're partnered with Super Microcomputer. They're partnered with NVIDIA here, as well as Dell and Intel and Hewlett Packard. And they've signed some deals in the billions of dollars recently, seeing more institutional investments as of recently, along with their financials starting to heat up. Now, their market cap's still pretty high, although they have some $10 billion deals. It's still with their market cap of just 4.89 billion. In comparison, it seems like they're undervalued, but it hasn't shown up on their revenue right now. So the revenue hasn't seen the heat up. But what we like about the company is that from a big picture standpoint, we can see the total assets are growing. So they got runway. We like that they're in the position of building the infrastructure that's powering AI. Brady, what's going on? So CoreWeave, NBIS, worth watching in the data center realm, says Brady. We'll take a look. And also, CoreWeave is one of the partners they have here that I believe is about a 7 billion or $11 billion deal to build some data centers with Applied Digital. So they were up 8% on Friday. We have some potential rate cuts hitting this week. So they are at highs now. So when you see this $18 resistance level, MACD looks overbought, RSI looks overbought. So just keep in mind that right now, just from a probability perspective, we could see them pull back. The next level of support is this previous resistance at 1789. So that 5% level that is key to watch. If they break out further, we're in a hyper bull trend. Next level of support would be $19, which is where they're at right now. But more than likely, we could see them retest that $18 price point before continuing up. Or just to keep that in mind, the conservative approach would be a more consistent sell down and not just a straight rocket up as they've been rocketing the past few days. So that's the breakdown for APLD, resistance at $19 and $18 support. So the next company we're going to go over, and I appreciate you guys, you can comment the ticker symbols down below, feel free to. But the next company we're going to go over is related to the sourcing of the materials for the industries that are going to require those materials, those minerals, in order to grow and have the infrastructure. So this comes, and to disclaim as well, a lot of you guys ask me, Will, do you ever get sponsored from these companies, APLD, things like that? I have not in the past. However, there is a company that I vetted very closely after looking at it myself, and I wouldn't share it with you guys unless I had gone through some of the fundamentals, gone through the financials and things like that. But that, to disclose, you can read the thing on the screen here. We're going over data centers, robotics, and there's also a disclaimer here for this company as we are working with them in this coverage. So to share that with you, you might say, Will, are you sharing, another company? What's going on? Things like that. Well, when it comes to most companies, including my own company and other people, it's actually better to talk with good investors that are looking at companies and use platforms like social media to get the word out about a company. They're finding Fox News or whatever. You're not going to get as much reach there. So that's why we are also entertaining the view of looking at this company. Now this company is over here. It's going to be ticker symbol FMST. So as we mentioned, that data centers are a big key to the growth of AI. There's also power of those data centers. And so when we look at FMST, you can see they've had this market cap build. We can urge some caution as they're at about a smaller market cap now, but you can see that they've risen up into this $3 price point right now. And they specialize specifically, if we go take a look at the company here, they specialize specifically in pioneering clean energy. And not just that, they are rapidly growing North American uranium exploration, holding an option to earn up to 70% interest in 10 unexplored properties from Denison mines. So one of the main ingredients that's going to power AI is the energy. It's taking almost full cities to power some of the data centers that are going into AI right now. And so when you see companies and the US having a massive, even Sam Altman, you see Jensen from NVIDIA having this massive movement towards, for example, nuclear energy. Well, if we're going to do that, there's something like 70% of our uranium is from companies or from places in sourcing in other countries like Russia, right? Or China or what have you. So this is a company here that's looking in North America and getting the uranium for powering, nuclear energy and things like that, and they're sourcing it. So that focus that we have here is definitely something that ties perfectly into how we like to analyze stocks. We like to look for companies that are going to be in the right level of the market and where we're looking. So this company is in that level. So what we're going to search up here, going to get this article for us to take a look at related to this company. And primarily what we're looking for is we're looking to build a focus on the AI movement that we're seeing right now in the data center industry is now moving towards, hey, where is the energy coming from? So NVIDIA CEO Jensen suggests nuclear power is going to sustain AI data centers. That's been the conversation, right? So that's the case. You also had recently with this company, FMST, Foremost Clean Energy, you can see they've recently pulled back. We've seen them pull back from that $5 range down into this $3 range. And with President Trump recently declaring nuclear energy a national security priority in May 2025, U.S. orders, U.S. banning Russian uranium imports, fast-tracking nuclear reactors. We see Sam Altman make big pushes for example, Oklo Energy. That's a nuclear company to power more data centers. Or another example is just in the recent Robinhood release of some new features they were coming out with. The CEO, when they asked what stock should we look up, the CEO said, why don't we look up, I think it was NuScale, a nuclear company. So the reason that I bring that up is because this company is focusing on this dependence that the US has on China and Russia for uranium, because the president, for example, is setting a goal to quadruple US nuclear capacity by 2050. So that means we'll need 2.5 times more uranium than the entire world produces today. And that's a staggering figure. And the urgency there is clear. If we have Russia, who controls 40% of the global supply, and China also has uranium for their own reactors, then we're looking, where can we build out uranium discovery in North America? And so we say, this North America basin is home to the richest uranium deposits on Earth. I mean, Russia's just across the water right there, right? So this company, you can see if data centers are consuming as much energy as small cities, and you see AI factories being a focus, this company, FMST, is basically saying, how can we be there to grab more of this uranium and be able to be the company that brings uranium to these nuclear powered plants, to these places like SMR, as we mentioned earlier, is expected to expand. They're going to need nuclear power. Some of the world's largest companies are looking at nuclear right now. And so this company is there on our list. So we've seen they have, I was looking at the article, they had some different areas where they were focusing on actually mining the uranium. They had some clear plans for where they're locating it, where they're getting it. And also with the recent trend they've been in, we've seen their market cap surge. They got up to about $3 a share. So again, smaller company than what we normally cover, maybe with the exception of like CTM stock. But if we look at, their market cap, still fairly small, like I urge caution, about 48 million. But we've seen, while they haven't had big revenues or revenue shown up, their balance sheet looks very healthy. We've seen their total assets grow, and their assets now are up to about $32 million in total assets, which is a large portion of their $48 million market cap they currently have. So they have the runway, they have the they have the cash right now, at least seeing their assets surge about 90% year over year indicates they're going to have runway. And so as they're going out, they're mining this uranium, And most companies are saying, we want to build nuclear, want to build nuclear. And all the tech giants like Meta, Amazon, Google, Apple are saying, we're going to have to do this. And then they're saying, okay, we're going to have to build this to power our AI boom without shutting down the grid, basically, or having to do this without we can't have low carbon efficiency. We gotta get this up. We gotta find more energy sources. FMST is the smaller company that's basically focusing on making that possible. So one thing to note around the financials and everything we just went over, with their runway they have currently, we see them have this uptrend. I would look for FMST personally in this range. And as I mentioned, it's a company that I personally am looking at. I like their balance sheet. Their level of support as they're continuing this uptrend right now seems to be right around this $2.80 range. They recently bounced it on Friday and they bounced up about 1.4%. Again, smaller cap stock, so these swings could be drastic. If it continues in the trend it's going and maybe makes this run up into this, $4 range somewhere in here, we're looking at about a 30 to 40% increase on the stock price. Now, there's risk, of course. You have the previous support to watch out for. And we do have a support level at about $2.90 above, below where they're currently at. So that would be a level to watch here on Monday. So that is FMST. Now, the other stocks that we're looking at that are going to be building nuclear, so that's a company that's getting the materials and putting them together to build nuclear energy. But when we have the data centers like APLD as a focus, we see them get to all-time highs. I see Jose says that APLD to $30. I love it. Kevin says DPRO. And then you got James, check out UEC for uranium play. Thanks, James, for pointing that one out. So uranium's a big play. So that's why we mentioned FMST. When it comes to the focus on the markets right now and where we're really aiming to get our focus towards, it's going to be the data center builders, but it's also going to be, again, the nuclear energy. So the nuclear companies we're watching, we have some focuses here like Oklo Energy, for example. We've seen them start to get into highs and make this run up into all-time highs. They've had a validation of a previous resistance. Now, Oklo hasn't turned revenue really at all, but they have a big balance sheet. They were initially backed by Sam Altman from OpenAI, and they're looking to continue. The other one, I think it was New Scale Power, which is SMR, and they're also breaking out and recently pulled back down here to this previous resistance level at around $35. So there's a lot of nuclear companies to be watching, but the valuations are pretty high right now. So just keep in mind, like, the volatility is there to have a close look at. So here is the next one we're going to cover for Kevin. It's called DPRO. Let's take a look. DPRO. It's going to be Dragonfly. Okay, so a couple things to note about this one. We'll pull up the financials, get an idea of what this looks like here. Dragonfly. Okay, so they have a $165 million market cap, or Canadian dollar market cap. Revenues coming in around $1 to $2 million per quarter. So Kevin, revenue is still a little bit low, although they're increasing year over year. Their total assets have surged up to about 30 million now. So they're in a range of a positive balance sheet, 30 million. What you'd look for is their value to the marketplace. Like, I can go into their chart, but right now the financials didn't look as favorable to start. So it looks like they're a trusted name in UAV hardware, software, sensors, and services. They do product development, contract engineering, software, data, and AI. They're doing mining of oil and gas, electric, US defense and government contractors. So let's take a look at that. That looks like probably where they're going to see the most momentum in this market. Defense. See if they have any contracts they're noting. Don't see them there. Let's take a look at their press releases. Okay. So Dragonfly positioned to support Canada's new $2 billion military commitment to Ukraine. Okay. So this is not necessarily a verification of a contract that they've received, but more of a, hey, this market over here in Ukraine is going well. They plan to do 220 million into drone tech for this, right? But they haven't secured the contract or anything like that. So that's where that becomes a little bit iffy, right? Okay, then we see US manufacturing footprint and capacity to meet demand for scalable. 37% increase, so their earnings came in. Okay. So from a press release perspective here for Kevin, one thing I'm noticing is they're talking about the markets. They're saying this market's growing. Canada's $80 billion defense modernization plan opens the door for Dragonfly. That's really cool, but they haven't secured that. So they're talking about the markets. They're saying, look at all this money that's happening or that's moving. But when we look at their financials, they haven't seen it show up in their balance sheet yet. So if revenue's at 2 million a quarter, they're 165 million Canadian, and that's not the best valuation for a defense company. Like they could be trading a little bit on the high end right now, unless they have legitimate contracts come through. Now, from a trend perspective, they do seem a little bit overbought at the moment. You can kind of get a look at this trend here. DPRO, you can see this overall trend. It has been fairly good, with the exception of that kind of large spike up to $7.50. They've recently pulled up. It looks like they're now at a resistance kind of around this $5.30 range, and they could face some resistance here. And I would expect them, I mean, it's possible they continue up, but I would expect them to potentially sell off here. There's a comment from Curtis says, Canadian military, we don't spend money on defense. That's funny. So RSI MACD looks overbought. They're in an uptrend, but they've recently pushed up. The financials don't quite add up. If you wanted to add like them to your portfolio, it's basically based on what could be, right? Where they could potentially come out with things in the future. Now, if we're looking at the AI defense companies, one of them is CTM, and this one's actually pretty comparable. So again, this DPRO stock, 165 market cap, right? 165 million, and they're only bringing in about 2 million per quarter with a negative net income of 4 million. Got it? Now, if we go over to CTM stock, okay, so again, CTM stock is a defense company. They only have $100 million market cap, okay, so about 60 million or give or take less than DPRO. And then CTM, they're bringing in $14 million per quarter with net income negative just 320K. See how that revenue is up? So when you look again back at this DPRO stock, they're only bringing in $1 million and they have a higher market cap, or 2 million and they have a higher market cap, greater negative net income or more negative net income. So I wouldn't see it as particularly favorable from a financial standpoint. I would be more interested in a company like CTM stock. So CTM stock, for example, they have really consistent growth and revenue of about $10 million to $14 million per quarter. They're seeing that kick in because they have a $100 million contract, larger than their current market cap. So they are processing large amounts of data for the US government, and they're also focused on agentic AI for the governments. So they're working with cybersecurity, surveillance, software development, all those things in the defense market for the US government. And they have really consistent revenues here. And they're only $100 million market cap. But again, if we look at the deals they have a contract there of over 100 million. So when you have deals coming in larger than their market cap, that's usually indication of growth. And that's exactly what we saw happen over on APLD. What's going on, Van Man? Yo, man, what's going on, Giant Pumpkins? Thanks for tuning in, guys. Appreciate you all. So that is the breakdown for CTM stock. It's in a good position financially. When we get into the support and resistance, just to disclaim, I do have long-term positions in this company. You can see that at $1 a share, they've made some runs up into about $1.60, $1.50 before. So they've recently bounced that $1 support. They're looking to continue to build this market cap as they've built over the last year, slowly but steadily, up from about 50 cents to about $1 now. They're looking to get up into this $2 to $5 range. And I am looking at this next level of resistance at about $1.45. So that's the next level of resistance. It's about a 35% increase from here. Now, the nearest level of support is now about 10% lower at about $1 a share. And that's what we've bounced recently. And we're looking to continue this trend, though, and have something similar to what we've had last time. Almost every time we've been able to catch great uptrends with CTM. We had a 70% trade at one point earlier this year, and they're one of the stocks we hold long-term, but also trade on the short term. We watch these moving averages. When they're holding below the green line, that's bearish. When they get back above this green line, they use it as a support, and that's usually where we look to buy. We look to enter positions. And recently, for the last 3 months, they were holding below that green line. They were kind of getting rejected, selling down to $1 a share. Recently, they shot up above the EMA, that green line. They got to retest the EMA recently, and now they've pulled back down, which is indication that we could see a retest and continuation back up into that $1.50 range. So we're watching them closely. We like their market. The AI defense market is a good market to be in. I do urge caution, though, because, again, they're a really small market cap, 100 million. And so while that is risky, one thing to consider as well is that actually, if you really look at what happens with the company, is that you want to watch out when market caps are small. Of course, like we always watch out, right? We're not here to trade pump and dumps or anything like that. We're here to find value that would attract institutions. Now, given the financials I showed you, having contracts larger than their market cap, having consistent revenues, growing year over year, it's surprising to see that they actually only have about 7.5% institutional ownership. So institutional ownership, while it's increased 23 holders as opposed to 8 holders that have decreased their positions, so 23 have increased their positions, only about 7.5% of the stock's current market cap is made up of institutions. That number has been higher before in the past when we saw it get up to $300 million market cap earlier this year. That was, it's not a huge swing, but $300 million is not much, but for institutions, those buy orders of potentially swinging it hundreds of millions of dollars is actually like hundreds of percentage points with a stock like this. So 7% institutional ownership, not any hype on the stock. That's why I like it. And you could see BlackRock was in a little bit. You saw State Street is in there a little bit along with Vanguard, which is why we follow it there. So again, CTM stock is going to be one we'll follow this week. For the Sunday stock talk, BBAI is going to be a focus as well. They've had some nice bounces recently around $5 and looking to get back up into that $6 to $7 range. We do have to watch out while it's like, oh, rate cuts are coming. Maybe we see the market, rally right now. We did see 7 consecutive days of green in the markets ahead of these rate cuts. So that could mean that we see the pricing in, we're already seeing the market price in for what we'd expect with the rate cuts. And when the rate cuts come, we might not go up, or we might even go down. And so just keep that in mind. Don't bet everything on rate cuts. It's always fine to have buying power, especially when we're at all-time highs in the market. But there's still opportunities. There's many opportunities. And if we don't trade them bullish, we can also potentially trade any bearish moves if they are lining up with our understanding of the semiconductor market or robotics or things like that. Let's see. Giant Pumpkin says, I'm selling my QUBT tomorrow, buying IONZ because IONQ looks overextended. Does that sound like a good plan? Any plan is a good plan. If you have a plan, that's great. Most people don't when they invest, and that's actually the difference. So IONQ, I just went to a quantum computing conference this past week, and we were able to speak with some people at IONQ, and I'll tell you, the revenue's far away. So with their current valuation, they got to all-time highs. It's amazing. They're a quantum computing company. They could revolutionize a lot of computing power and save energy and make the AI boom scale to unprecedented heights. That's what every quantum company is working towards. But are they there yet? Not quite. So the valuations being where they are, we could definitely see some pullbacks in the quantum market. It was near a record week this past week. So yeah, I mean, if that's the plan, have a plan together. Look for, if you're going to be trading the inverse and look for a sell-off. I only trade inverses of markets that we understand. So if it's like, if we're trading inverse, it's got to be semiconductors, or it's got to be data centers, or space tech, because those are the markets and quantum, if we're trading quantum. So I've done some shorts. I did really well on some shorts over on QBTS. Last time we saw QBTS get up to $20 a share. I ended up shorting it, and it sold down as low as $14. So that was a great short earlier this year in the summer. But we primarily were looking for bullish moves, and the same way that we would only trade shorter term on stocks that we would hold long term, the same thing is true for our shorting. We would only short we only want to short markets and companies that we actually understand how they move. We've been watching them. It's okay if we're long term on them. In fact, that's actually not a bad idea. It kind of hedges against loss, so not too bad if you're confident you see the moves playing out. Michael says, a really big push for Rigetti on Friday. What do you think in the near term? Yeah, I think Rigetti's kind of in the same place as what we were just talking about with IONQ. We saw Rigetti get up, quantum computing company. They've had some levels of success with new deployments of their technology, but they're still far away as well from seeing notable revenue. So when we're looking at Rigetti stock, we've seen them launch their quantum computer. They have a lot of new developments come out, and they have sold some of their QPUs to universities and different companies, but their revenue's lagging. Fidelity's increasing, but fidelity is one thing. Then you got to have use case. You got to have the commercialization. So like, while they're qubits and they're getting error correction, more dialed, they still have to figure out, the applicable science for it. At the Q Control sponsored event I just went to last week, we saw some of the applicable use cases for Rigetti and other quantum companies, and they're there, but they're still building them out. They got the distribution channels though, like with AWS, as well as Microsoft. You can go over to Microsoft, see that Rigetti's seeing the ability to tap into the quantum computer through the cloud. So the only question then is like, can they keep up this market cap? Well, we just saw them, again, they're at a resistance, $20 a share. It's an all-time high for them, I think. Oh, maybe they did reach that back in January. So near an all-time high, $20 a share. They started to pull back. And then when we're looking at their financials, $6 billion market cap, revenue is still kind of non-existent, right? So we haven't seen the revenue come in. It's buying what could be. Balance sheet's great. They got runway, $636 million. But in the near term, I would expect volatility and potentially a pullback here with Rigetti, um, due to the financials. I mean, market sentiment could continue up, but institutions or whoever's really looking at it, and the people that have sizable positions, if they're analyzing what they got in their hands, they'll probably say, hey, look at this revenue. We might be a while out. And that could trigger some sell downs. And oftentimes institutions drive price up before they sell off too. So just keep that in mind, um, with the all-time highs, I wouldn't touch it, but I do have long-term positions. You could see we entered on Schwab, or here as well. We're up 80% on Rigetti just this year, or really just this summer. So like I'm not like a bear or anything like that. I mean, I hold it obviously. Like even earlier this year, after the quantum crash happened, when Nvidia CEO said it was 15, 30 years away, I flew out to the CES conference to get some eyeballs in the room at a quantum. Oh, excuse me, guys. Didn't mean to bump my mic there. To a quantum computing conference where they said, no, we're actually using quantum right now. And they crashed the market. Then Nvidia said, oh, we're doing quantum now. I actually got my father to buy. I said, Dad, let's get you in some quantum stocks. It's a perfect time. Right after this massive correction, and we went to the CES conference and said, no, they're doing some really cool stuff. It wouldn't make sense for them to crash like that. And so $5.50, actually, it was like $6 a share. My dad entered, and he just sold this past week actually in Rigetti stock. So, but I hold my long-term positions. I'm not going to do anything. We love to trade the short-term positions. We do it almost every week. So we'll be definitely watching it this week. Used to draw says, Will, hi brother. I'm popping in to say hi. Hey Marco, good to see you, man. And I hope your night's going well. Yeah, we're just analyzing some quantum stocks. We went over data center companies. We got to go into some uranium companies as well, and that are sourcing the materials. We got to go over some AI generators, along with some defense companies, and even a little drone tech tonight. So it's been cool. Michael says, people are comparing bull to hood. Have you looked at bull? I have, and I think that they have an advantage in that they're an app first brokerage. As far as comparing them to Robinhood, they're pretty similar. I think they even have the like trade events, which I haven't really figured out how they managed to sneak around gambling laws. I don't want to say I don't want to say sneak, but how does that work, right? To get around the gambling laws in most states, that you can like now trade on events. Even like I'm in California, they don't really allow gambling here. But anyway, I'm curious how they're able to do that, or what they say they're trading contracts of an event or something, but it's still like a gamble. I'm not sure. But anyway, I think they're probably fundamentally a good play. We'd have to look at some of the financials and what have you, but I think fundamentally they're in a good spot. Owe's here. What's going on, Owe? Good to see you. David Chavez is here. Says APLD all day. Kenny's here. Hey, Will, check out CIFR. I've seen that one before. I don't know if it's here. It is. Kenny, I don't know if you made it, but we covered a stock earlier on uranium mining. All right, let's take a look. CIFR has been really pumping up here, Kenny. So I would be a little more hesitant on this one from just intuition right now. I mean, you can definitely see this trend for sure. It is making some momentum, with the exception of the market sell down in April. But with this recent trend, you see it spike up to $10.60 a share here. RSI, MACD, everything pointing to overbought at the moment, above a resistance. What does it look like? What does this company look like? It is CIFR. Let's take a look. All right, market cap 4.27 billion, 18% year over year growth on their revenue. Annually, revenue has been increasing. Quarterly, they're on track to do about 250 million this year, which is much greater than 2024. And their current market cap is 4.27 billion. Pretty balanced. Pretty balanced, Kenny. See their balance sheet increase. They got over $1 billion in assets. This actually looks kind of similar to APLD from a valuation and revenue standpoint. 4.2 billion. Yeah, I mean they could run up to 5 billion potential market cap. Revenue 43 million a quarter. Balance sheet's definitely increasing year over year. I guess it kind of depends too on their market. So what is the name of this company here? Cipher Mining. All right, Cipher Mining Technologies. There is a fair amount of hype I'm seeing on the first page of Google. Dedicated developing and operating industrial scale data centers for both Bitcoin mining and HPC infrastructure at the highest standards of innovation. So wow, it's funny that I compared them to APLD because that's kind of similar to what APLD does, and I didn't know that. Investors, let's take a look at their press releases. So they're building some data centers and Bitcoin mining. Yeah, interesting. Okay, I mean, when it comes down to the infrastructure of crypto, I mean, there's no doubt that we could see them grow. I guess it's kind of like at least I'm looking at contribution wise, right? So data centers for AI, I think have a greater positive impact if they're obviously ethically built with liquid cooling, renewable sources, most likely going to be, built with their own power sources or near sustainable energy, kind of how APLD is. That's the reason APLD succeeds. It's because they have that focus, I think. Because companies are saying, hey, we're going to partner with them. We're NVIDIA, we're Apple. Like, why would we go with this company? And they're saying, we use wind energy. We're using hydroelectric. We'll do solar. We're doing, build it in the cold place, do the liquid cooling. So that's actually a really nice, sustainable way to build a data center. And like not even like bringing up anything related to changes that people assume happen in the climate, right? It's not even related to that. It's just a matter of like actual energy usage, like just efficiency wise. Like you're gonna be way better off with like liquid cooling and like focusing on how you build versus like what you build. And so they're building they're building mining spots, mining rigs. My question is going to be like where, right? Where are they building it and how are they building it? And then also my question is going to be, how much of a value is it to society? Is it so they can mine Bitcoin? Okay, cool. They're building it. They're going to mine Bitcoin. Cool. Does that serve the marketplace that much? Maybe. And what do they do when they get their profits? Do they buy their own stock? Do they not buy their own stock and just hold their Bitcoin? You gotta, or do they sell their own stock to buy Bitcoin? Like there are questions to ask about the Bitcoin mining companies where they become more sketchy than a company, for example, building for AI, because now you're building AI and this is like the impact that could have. It allows a lot of people to run their business, things like that. And I get it, like infrastructure for Bitcoin is important, but you still got to think about the actual value to the marketplace. So I don't know that I see like that as a propeller for them. That is like, I see them overextended at the moment. They look a little manipulated the way they're like surging right now. And the market cap seems like it wouldn't have that much to run given where they're at currently. So I would expect a pullback and probably a sell down. So hopefully that's helpful. Yeah, Kenny says, imagine Oracle takes a stake. Yeah, I mean, it's possible. Definitely. It is possible. But, it hasn't happened. So that would be more, um, speculation. So Ed's here. What's going on, Ed? Happy to see you. Steve Byron says it's going to take a lot of power. That's for sure. So yeah, I mean, there's a lot of things to consider. That's why we went over nuclear defense and space or semiconductors. That's why we're going over some of the robotics as well. And so we're going to continue to keep an update on these stocks. For those of you guys that want to learn how to trade and invest in these quantum companies, in semiconductors, robotics, maybe it's drone tech, maybe it's just the AI boom that we're in right now. We do go live every day at Market Open. We have some earnings for this week. If you guys would like to get the earnings along with all the targets for companies when they're reporting what the targets are in our community of Stockmate, there's over 25 individuals that are millionaires that you could surround yourself with and get access to our daily live trading sessions that happen every day at Market Open. So if you want to join us there, it's the second link in the description below. So there's one link, and then that's a profit calculator. The second link there, it will say Stockmate is expiring. Go check it out. If you want to get lifetime access to our daily live trading, it's the second link below. And as a bonus, I'll send you a free t-shirt. How about that? Thanks so much, guys. Appreciate you all. I hope you have a great rest of your day. Hit the like button if I earned it. Do consider subscribing, and I'll see you in the next video. Thank you.